All right, ladies and gentlemen, joining us now is Siddarth Pai. He's the founding partner and CFO at 341 Capital. He lays out why deregulation of financial services, tax certainty and liberalized lending norms are critical in the upcoming budget. Thank you very much, Siddarth, for taking the time out and speaking to us here on ET. Now, global trade is in flux. There are global realignments that are happening. So in these very interesting times, if I may say, what are your key budget expectations for the VC and the startup ecosystem?
I think the first and foremost expectation in the budget is that the government needs to end up accelerating the deregulation exercises they've ended up actually undertaking. So there was a rehaul of financial services regulation. We've seen the securities market code end up actually coming up also, for that matter. But I think the expectation from investors is that a lot more liberalization and a lot more red tape has to end up actually being pulled out over there. The second part, when it comes to taxation, I don't think investors are actually looking for a tax rate cut in any way or form. We've already seen the previous budget end up putting a lot more capital and a lot more money into the hands of everyday taxpayers. That's the number one. And the GST rate cuts also have ended up releasing a lot more capital into the system itself. What's most crucial for investors as of now is actually tax certainty. So they want to make sure that some of the nebulousness and the ambiguity in the taxation system ends up actually going away. That's number one. Number two, also for that matter, the vast amounts of tax litigation that the government ends up actually creating against various industries also needs to end up actually going away itself. What we need is tax certainty, that the positions taken by the government, the DTAs that have been signed, any of the agreements that are actually there will end up being enforced and won't be challenged anytime there's a large exit or something that ends up actually happening over there also, for that matter. The last thing that we also need to see from a tax perspective is there are too many artificial restrictions within the tax code that actually genuinely prevents capital formation and capital to end up actually flowing into startups as well as flowing into venture capital, private equity and AIFs as well, for that matter. I'll give you an example. Endowments are one of the largest sources of capital, large source of investment for a large number of VC and private equity funds. Whereas in India, for that matter, it is next to impossible for any university endowment or private endowment to end up actually investing into the fund. While India welcomes this sort of capital coming in from overseas, the restrictions that we have on our own local endowments to end up making these investments is actually paradoxical. So that is an easy enough win to end up actually pulling out, and that will increase the vast amount of domestic capital that's waiting to end up investing into these markets to truly end up actually showing its force. So I think these are the three main expectations that investors end up having from the upcoming budget.
Right. So, Siddarth, you mentioned about the GST cuts, but there have been several other schemes that have helped the startup ecosystem, the entrepreneurial ecosystem as well. Let me ask you about, the VC funding. Actually, that's seen quite a dip, especially as far as late stage funding is concerned. Early stage investments, they remain, perked up. They remain decent, but would a larger loan size, as far as the Stand Up India scheme is concerned, in the upcoming budget, will that improve credit access for startups which are not getting funded enough?
I think more than for the credit access for startups to end up increasing, I think the RBI needs to end up liberalizing its norms, its lending norms for banks especially, because NBFCs have become the primary source of debt capital. NBFCs and venture debt have become the primary source of debt capital for startups. Because when banks end up actually looking at a startup that doesn't have real assets, most of the assets consist of three C's. It consists of cash, it consists of computers, consists of code, for that matter. Unless they have tangible assets, the ability for a bank to hypothecate those assets and end up actually lending against it doesn't end up existing. That's number one. Number two, most of these startups also end up actually being loss-making during the early stages of their existence also. The moment it's a loss-making entity, the underwriting norms end up actually dramatically changing. So as opposed to the RBI prescribing hard set norms within, it should be left up to individual banks to end up deciding what sort of credit exposure they want to end up having to this emerging asset class itself. Because banks do want to, a large number of reasons why Indian startups end up raising capital is actually for working capital purposes. It is financially obscene for a company to end up raising equity capital, which is the costliest form of capital, to end up actually subsidizing working capital operations. So that needs to end up actually changing. What we've seen come up through the Stand Up India scheme, etc., is a great shot in the arm. But the caps on that being about 10 to 20 crores isn't large enough for scaling companies to end up actually absorbing that. So we do need the banking ecosystem to be liberalized to allow them to take selective exposure to these up and coming assets while having the regular safeguards that the RBI normally ends up prescribing for this as well.
Right, so that's just one final question before we let you go. Let's also talk about R&D, given the fact that the government also needs to invest in R&D, and that has been an industry concern. We were just talking to Ronnie Screwvala. He also mentioned that India needs to invest a significant amount into R&D. So how much has the 1 lakh crore R&D fund and state-level startup policies really helped in percolating entrepreneurship into smaller cities? Because now the government's vision is to become the largest startup ecosystem in the world. And what more could be done in that regard? Should the government just be focused on R&D? Should a larger chunk of what the budget is for, especially as far as the startup ecosystem is concerned, go for R&D?
I think Karnataka has actually been a fantastic pioneer on this. They have one of the strongest startup policies, and it's helped to actually launch Bangalore into the premier startup hub. And the Karnataka government is also working on an initiative known as Beyond Bengaluru, where they're trying to get startups to end up coming up to places like Hubli, Dharwad, etc. I think Startup India 1.0, the Startup India scheme, did a fantastic job about democratizing ambition to become an entrepreneur. Now, what we need as of now is not just entrepreneurs coming up in Mumbai, in Delhi, in Bangalore, Chennai for that matter. We actually need them to come up throughout your tier 2 and tier 3 cities. The reason why we don't, so some of the scheme that ends up actually doing is the moment people end up actually investing into these particular areas, it should be easier for them to end up actually getting land. It should be easier for them to end up actually getting access to bank financing also. And the labor reforms that have ended up actually coming through needs to be better enforced over there. I think that's actually number one. Number two, also for that matter, I think the government's model of borrowing a leaf from the China model to end up actually creating these sort of clusters, dedicated clusters based on local strength, will end up actually creating that sort of ecosystem effect that's actually essential. We can't end up having IT services clusters or IT or consumer internet companies throughout the entire place. Through the coastal areas, there are a large number of people working in pisciculture that can end up actually coming up also. Towards the areas that end up actually doing a large amount in weaving, there are tremendous number of startups in the fast fashion space as well as in the fashion tech space that can end up actually benefiting from that. So I think the government needs to make it easier to end up actually setting up operations in this area, because some of the talent in the local area doesn't fully understand a startup that ends up actually coming in and try to operate. So that on the ground friction needs to end up actually getting eased out in order for Startup India to 2.0 to truly democratize access to entrepreneurship to every Indian across the nation.
All right. Thank you very much, Siddharth, for taking the time out and speaking to us here on ET Now. Appreciate you taking the time.